Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Welcome to the AICPA Town Hall. I'm Eric Auskerson, one of your hosts for today. Today is Tuesday, June 10th, and we're coming to you live from Engage in Las Vegas. So it's fantastic to be with this panel. We've got a great show. Right to the left of me is Mark Koziol, the CEO of the AICPA. So we're going to kick things off. We're going to talk a little bit about Engage for the town hall audience. Then we're going to have a profession update. We got plenty to talk about in DC with Mark Peterson and Melanie. And then we're going to have an open forum session. So kicking things off here, Mark, it's fantastic. We're with 5,000 members, 200 exhibitors, these technology companies that are helping transform the practice of finance and accounting. So many great speakers, sessions, different tracks.
Yeah, it's great to hear from the members. I had the opportunity, Lexi and I were both at the first timers reception that we did Sunday night, and people were just really excited to be here for the first time. And then to reconnect with members who have been here for just about all 9 of the engaged sessions that we've had has been neat to see. There is something for everyone in the accounting profession at this event. And so it is absolutely the largest event in the country, possibly the largest event in the world, with 5,000 attendees the way we see it today.
Well, you know, Mark, there's a lot of collaboration going on here at Engage, and it's similar community, the town hall community. I'm getting a lot of town hall attendees here with us at Engage, and we really value kind of bringing these two events together. I mean, really, we have like 15,000 people with us when you add the town hall community. So
the only issue is that, I set my clock to Thursday at 3 o'clock, so I'm a little off now. I don't know what day it is anymore.
I know. I had to write down it was Tuesday, June 10th. So, so with that, I'd like to introduce Lexi Kessler, who you all know. She's the new AICPA chair. She's a partner at Aprio. There was an article that just came out in the J of A highlighting some of the, key themes that Lexi's focusing on for her chair year. They're highlighted on this slide. Lexi, it's great to have you here. I know you're connecting with a lot of members.
Oh, I am, Eric, and thank you for having me. It's really exciting to be here as I embark on my year as chair. And just to meet so many people, one of the things I've talked about I wanted to accomplish is really listening and connecting, and this is a great opportunity to do that. And I will tell you, with so many people I've talked to, I get some little nugget of information, and it gets me very energized, and I'm excited to see what I can take it back and do something with it. So thanks for having me.
Well, I'm looking forward to getting into this discussion with you and Mark. You both gave a great keynote yesterday. We've highlighted some of the key themes here, Mark.
Yep, and just as an overall, and whenever I've done this presentation, and I guess it's in my training and my DNA, and Lexi's been through this for a period of years, but really, taking a look at the landscape around us. What are all the things that are happening around the profession, and then getting specifically into the profession, and more importantly, what can we do about it? So starting kind of with the business environment, and if we go to the next slide, we could talk about the economic outlook. We talked about this. We've seen this on previous town halls. Yes, the latest came out that, again, there was a reduction in the second quarter of 25 from where we were in the first quarter. But I always looked at the fourth quarter as kind of an anomaly, a spike up that really wasn't necessarily sustainable. We're kind of back in line with where the optimism's been over all these years. And then you can't help but talk about tariffs on the next slide and the uncertainty around that. But, with uncertainty comes opportunity for our profession, and how do we talk to our clients about it? I've talked about this in prior town halls, so it's an important aspect.
Mark, just a question coming in here, and this was something that you talked about yesterday with Gary Cohn, and there was an economist as well from the conference board.
Yep.
Likelihood of a recession in 2025.
And Gary seemed pretty optimistic that wasn't going to happen, and the conference board chair was a little bit different on that. I mean, first of all, and I think Mark Peterson has said this time and again, if anyone says that they have the crystal ball or they know what's going to happen, whether it's around tariffs or around recession, and they tell you that they have the answer, they are absolutely lying. So, to say now that I could see it, there are risks, I think, of what could happen, but there's also opportunities based on other things that can happen. And I think that, there's a lot of conversation around it. I look forward to the DC update as we talk about these things.
But there was a lot of, even post that session with Gary Cohn, feeling like we're going to work our way through these tariffs.
Absolutely.
They're going to work.
Yeah.
There's a lot of Mark, you've been saying this, don't watch the 24-hour news cycle. There's a lot of noise.
Yep.
But at the end of the day, they will settle in a fashion, hopefully, that does not lead to a recession.
The other slide I had on tariffs in the update, and we've shown it here on the town hall before, that's the thing. We have resources at AICPA that we keep updated. Focus on that, and then your clients will be having questions around it if they're dealing globally. And because of that, I think use that resource. It's all you can do is talk to them about what we know now.
Right.
Well, Lexi, here's something that you're very, very passionate about, quality and trust.
Yes, absolutely. And we're very fortunate in the fact that we're probably the most trusted profession that's out there. And really, it's the trust that's created this opportunity for us that we've been talking about with all the disruption that's happening in our world. And, we take a step back. We do serve the public interest with what we do. We support the market integrity. We guide the profession in everything that we do day in and day out. And it's important we uphold and apply the professional standards in how we approach the work that we do and the delivery of the product in the end. And we need to stick to the practices that continue to drive trust, the opportunity, and the prosperity. And you can see some of the things that we've talked about before that we're still continuing to do. We have an ANA Focus series that provides valuable resources and insights to practitioners and to professionals in accounting, auditing, and insurance. And this past January, we updated a practice aid for auditing digital assets and really giving some definition around some of the digital assets, which is an area that's changing continuously right now.
Absolutely. So I think if we talk about quality and trust, and one of the things that you and I have talked about this a lot, both former auditors at some point, and, is the fact that audit equals trust. That is the one thing we are licensed to do absolutely in every state. And because of that level of trust, we've been given permission to do all of these other pieces around who we are. And so we always have to maintain that level of trust. It is a complex ecosystem we have as a profession. So even if as a small practitioner, you are tax only focused, it is still the ecosystem that drives that marketplace trust. Absolutely. That helps in that scenario. And so that CPA as the brand overall, still there, you have a leg up over other tax preparers, tax practitioners who may not have that. And so I think all of us promoting the fact that we have this level of trust becomes important.
And we see that happen in the marketplace. We saw it, I think COVID has been a great example of where there was disruption and significant unknowns that were happening. You talk about uncertainty. The business community turned to us for the answers. And I remember within our organization, we were scrambling to figure out a whole lot of things, and AICPA provided so many resources to help guide the profession to be the leaders in helping to bring solutions to the table. So it's a great example.
Well, we're going to get into now some updates related to some standards. We've talked about this before, but this is a hot topic here at Engage.
Yes, and there is, coming December 15th, for those that may not be aware, there's a new standard around quality management that's coming into place. And the idea behind it really is creating a risk-based approach and quality management that's tailored to any organization, so it matches the size firm and it gives you that flexibility. But it's really, we've revised components of the standards, making it more robust, and it's really, I think it's enhancing what we are doing and providing for the marketplace to continue to build that trust. And one of the things that we talked about, I think actually one of the bigger things is the process that needs to go around it. I think that's one of the newer things. It's really not just implementing something, it's how you're executing on that, on the standards. And I know that we've shared that there is a little bit of concern, not concern, but our firm's really ready for this. With as many other distractions that we're having right now in our organizations, being able to take a step back and really focus on what this means and getting that into place.
Go ahead.
Yeah, Mark, and there's a question that came in yesterday. We didn't have a chance to get to it during your keynote, your and Lexi's keynote was, almost a little, slightly sarcastic, just saying, hey, the AICPA, so you're coming out with a new quality management standard, and then in 3 years, you're going to come out with another quality management standard. We've got a lot going on in the firm, so maybe help us understand the why a little bit more.
Yeah, you know, we always worry about standards overload to the profession, especially to the small firm. It is a lot to take on, and you know, we understand that, but we also, the standards are what still develops the level of trust of who we are. The quality management standards have not been touched in over 10 years. It's been over a decade since the quality management standards have changed at all. And so a 10-year update, if you will, and it's a big one. I don't want to discount that fact, and I don't want to discount that it's hard for smaller firms to implement, but I also think the more we can try and help all of our firms with implementation and having the right tools, you know, that's really what we're focused on. And we can't not just stay dormant on all standards.
And you're moving away from the checklist approach.
Absolutely.
So there is hopefully, once you get over the change management, long term, hopefully more efficiency and higher quality.
That's right. That's right. And I do think there's a level of, you know, it provides a level of security to the marketplace too. And even small firms saying that, you know, this is a lot, I don't want to do quality management standards, I don't want to have to update that. Well, there are many, many small firms who are in the local government space, the not-for-profit space, and I can tell you, based on I just met with the GAO a couple weeks ago, that level of trust that we're creating around changing things like the quality management standards and the audit quality initiatives that we've had, they have stood up to that, and they have actually said they are going to rely more on what we've done from a self-regulatory, self-oversight perspective as a profession. So that's helped our small firms as well, who are still in the space of local government and not-for-profit, where we need you. We need the small firms in that space to be able to provide that service.
Mm-hmm.
So Mark, there are some tools, there's questions coming in. You know, there's questions even coming in. If you do not do, a small firm does not do audit reviews or financial statement preparations, the quality management standards.
It's not a bad thing to still have a quality management system.
You have quality, but
yeah.
I mean, for the assurance practice.
This is the assurance practice, absolutely. And I do think that some of the other things that we've done for the small firm, because there are firms that have said, you know, I'm not in the assurance space, I don't want to be a CPA, and I was afraid of what the type of client work that I was doing would get me lumped into some level of being in the assurance aspect. And I think SARS 27 really cleared that up for our small firm to be able to be a client accounting practice, follow the consulting standards rather than the SARS around what that is. And so really trying to help the firms better delineate the type of service that they're providing to the marketplace becomes really important. You have here, for those who are or do have to follow the QM standards, there are options. There are options in ways that we could do it. You know, you can use Excel as a template to be able to do it. The only problem with Excel is the ability to keep it updated, because there is this ongoing monitoring and support that you need to do with your QM system. But there's other tools that are available to that. And one of the things, and you know, you had just, we have a meeting with QM Core that came out and with a partnership announcement that CPA.com did. And I've known this company actually before I came back to AICPA, and I was really happy to see the relationship there. But when they were coming into the US marketplace, I said to them then, you need to have scalability. This has to be a scalable product to be able to help firms of all sizes, and I think they've accomplished that. So I'm excited about what that partnership's going to look like.
Yeah, absolutely. I mean, software solutions, I mean, the technology vendors are really helping both deliver the different services, it be in the audit area, the tax area, client accounting services, and also focused here with this QM Core solution on helping comply with the standard. So what we want to do now, we're going to push a poll here. And one thing with the poll, it's going to, for the town hall audience, you'll see it over the next minute or so. It takes a little bit of time to propagate. And the question is, what is your firm's likelihood of Q implementation by December 15th, 2025? And that's the effective date. of the standard, and it's just, very likely, somewhat likely, you're unsure, or not likely. And please answer via the poll function. Here are some additional resources. And one reason why we're putting the poll out there is we just want to understand the state of readiness with the firms. And we will, based on some of this input, we'll adjust our resources and support materials. So Mark, continuing on with the audit discussion, one thing that you and I are both well aware of is 2025 really is the year of audit transformation. There's been a lot of innovations being developed over the past couple of years. One of those big innovations is the Dynamic Audit Solution, an initiative that's been led by the AICPA and CPA.com, which is really in its full commercial state right now. And we actually have a DAS market update there. You've got the QR code, or you can click on that link. But this project has really been a collaboration. Again, we use that word to kick off today's town hall with the firms. This is a tool that was built by auditors for auditors.
Mm-hmm. Yeah, and one of the comments that came in yesterday too was around DAS and the fact of, is there a conflict with AICPA doing this? There are incredible guardrails separating the development of an audit tool and the auditing standards in the ASB that's out there today. And so they are not connected in any way, shape, or form. That's by design. But the audit profession, the audit group in the profession, they needed transformation.
Absolutely.
And the audit world hasn't been transformed. And so we are driving that transformation, whether you use DAS or other products. We need to make sure that we're keeping up to date with what's happening on technology. Right. You've seen this at Aprio.
Yeah, yes, I agree. And I can say that the North Star, since this was first announced back in 2018, has been transformation of audit methodology. Yep. It's not just a new software package to use. It was with a deliberate focus and intent to create something that would help to be more evergreen in helping us, and really allowing our folks to not be doing the lower level items and focus on what really is the audit methodology behind it, and learn more. Actually, I think some of the feedback we're getting is our folks are actually learning more by using the software package.
Lexi, that's well stated. I mean, I'm hearing from a lot of firms that these new tools are energizing the younger staff.
Yes.
It's a tailored approach. It's cloud-based. You can collaborate on these engagements with people in different offices. Mm-hmm. So there's many. This has been an underinvested area, and Mark, this is why the AICPA took on this project. You and I, back in 2018, really kicked this off with Sue Coffey and others, because of the underinvestment. And what the exciting thing is now, there's a lot of investment being put into these tools, which are then also in line with this transformative methodology, which has been led by the AICPA.
And what is it now? Close to 300 firms of all sizes, right, that have been engaged in DAS in one way or another. And so it's really been a profession-wide tool. And scalability was absolutely paramount when we started this project, to make sure that all firms had the ability to be able to use it depending on the size of client that they had, and that was critical.
Right. Very holistic in its approach.
Yep.
So let's now, technology is a huge topic in all of our lives, and it's a huge topic here at Engage. Today, Mark, I know we're digital here, but we have a printed copy of the just released 2025 AI and Accounting Report. This, when I think about what's happening here with Gen AI and this huge AI movement, I look back on 10 or 15 years ago when we had the whole move to the cloud. This actually seems even more significant, Mark, and things are moving faster.
Yeah, it's interesting because, we talked about AI, Lexi and I did a bit when we were doing our update yesterday. And, I have this slide, and I saw in accounting today, they had written about this part of our presentation.
Yes, they did. Yeah.
That I don't know what accountants and CPAs, what we've done to society, that every time there's a new innovation, they want to say that it's going to put accountants out of business. 1930s, the electronic calculator, 1970s, the spreadsheet, competition in whether it was TurboTax or QuickBooks, those things were going to put us out of business. And yet here we are, and we've enhanced our practices because of it. And I think the more we can embrace this, the more we stay on top of it, the more we are going to accelerate and elevate and thrive with AI as one of our tools.
I think it's imperative that firms and organizations are adopting this. And I had heard a woman on a panel many, many years ago, she's ahead of her time. She said, you really need to adopt technology at a disruptive pace. Mm-hmm. And that covers where change management is becoming that. It's going to become an overused term of art, overused before too much longer, but it really is having that skill set.
And being here that's one of the benefits of all of our live engaged attendees here, is the ability to interact with all these technologies that are showing up here at the exhibit hall, and talking about how they're integrating AI, how you can use their tool to be able to be bigger, better, faster, smarter, and how you're interacting with your client.
Well, here's some of the findings from that AI accounting report. One of the exciting things is, and this is based on our primary research, is that we're finding that firms are actually ahead of many other markets, industries related to the adoption of AI. And there's many reasons for that. If you think about the large language models, you think about the data sets in the tax area, the accounting area, and the audit area, it really is well suited to leverage the power of Gen AI. So, that we talk a lot about, workload pressures. The exciting, and I agree with you completely, Mark, this is not going to displace accountants, or firms, or trusted advisors in particular. This is going to enhance what they do. Their business clients want somebody else running these machines. The machines are getting more complicated, more sophisticated, and as you look down this list here, every single area has a lot of opportunity related to advancement.
I think, when we look at this list 5 years from now, I would predict, dare I say predict, that we won't even see bookkeeping and automation on this list. Right. Because it's just going to be so natural for bookkeeping to be completely eliminated, wiped away from what gets done. And so the relation between the bookkeeping, the CAS 1.0, as we've called it over time, right, with the fourth bullet, advisory services, and how that's already being disrupted inside the AI space. But, when did we start, Eric? The CAS 2.0, it's at least 5 years, I would think.
Yeah.
CAS 1.0, we were talking about 12 plus years ago, and the movement to the cloud. And that we don't even talk about the cloud anymore. For all of us, it is just automatically integrated into our practice. And so today, now moving into that advisory service, and the ones that have kind of lagged behind, surprisingly, is tax prep. I don't think we've seen as much on the tax preparation side. Definitely tax research, we've seen more AI tools, and we've talked about BlueJay, one of the CPA.com partners as well. And they're a very popular dance at the ball here during this show. A lot of small firms that are integrating that into their research tool. But this is going to continue to thrive.
So somebody listening to what you just said, there's an opportunity for the tax development here.
Absolutely.
For the profession wide.
And that's happening. I think we are going to see in the next year a new tax preparation professional tool for the firms. There has been new tools that's come out on the consumer side. Yep. There has been a new logo entry in the core tax prep in 20, 30 plus years.
Yep.
Yeah.
Well, we just want to highlight our Startup Accelerators. This is a program that's led by the AICPA and CPA.com. Here's our last two cohorts. We have the 2025 cohort here with us at Engage. They're in the AICPA pavilion. And we're really just trying to collaborate with the ecosystem. We have so many entrepreneurs that are looking to solve problems for businesses as well as firms. And it's a combination. And I continue to be very, very impressed by the quality of the entrepreneurs that are coming into our space.
Absolutely. And I look forward to this program. I'm glad I'm back at the AICPA now, so hopefully I can hang out with these accelerators. They're always fun to see and be introduced to. And this is really, as we look back at the history of the accelerator program and where those companies have progressed today and how they are integrated into the profession so well, I think this is a really important tool and partnership for us to have.
Yeah, and it is. I mean, as you said, and Lexi, maybe you comment on Aprio. You guys are very technology forward, but it's a partnership here with these companies.
Absolutely, it is. I mean, that was one of my breakfast meetings this morning. Was hearing about the new things that are happening and how that can mean, what that can mean for our organization, and wanting our feedback on it, which we really appreciate that.
Well, Mark and Lexi, we've got one final slide in the profession update. Lexi, this is something you've been extremely passionate about.
Yes. So I'm very excited to share we have some good news for a change. And that is spring semester 2025 was the third consecutive semester of double-digit growth in accounting enrollments. So go us, yay. And we saw also 72% increase in the master's programs for accounting. We saw for the CPA exam candidates that are sitting for the exam, we saw it was more than what we had expected. We expected it to drop a little bit because there was a new exam, and it did, but it wasn't as much as we expected. And also, one of the impact findings was the employee experience and starting salaries. And so we're seeing an increase relative to public accounting of 15% and 25% on business and industry. So we're definitely seeing some movement. We do not take our foot off the gas. This is something that it still has a ways to go, but it is a huge start in the right direction, and we're very excited about it. So everything that you guys have been doing, please continue to do that. Some of the more recent survey results that we have gotten with Center of Audit Quality is that there's an increase of those taking accounting classes, like we talked about that. But once they took their first accounting class, or they made the decision to take an accounting in college, it was 46% and 39% before college. So it's really important, these STEM programs, getting out to high schools even and talking about a profession, because decisions are made pretty early on right now. And what I thought was most fascinating was the reasons why people are choosing accounting has shifted. And that's shifted to the job demand. 66% know that they are in demand, and there's job security that comes with that. The economic conditions, 48% they're choosing because of that. And that's because with the uncertainty economically, what's happening in the marketplace, accounting's pretty attractive right now. And starting salaries, the earnings potential, where it's improving out the gate when you graduate, is seeing that they're knowing that there's the potential at least to improve, and that's over 56%. So we're seeing significant trends going in the right direction, and it's really exciting to see all that work.
Yeah, so it was the fall semester was the first announcement, and that announcement happened within my first 60 days of coming back to the AICPA as CEO. And so as I was out doing presentations, I would say, "You're welcome." Like I had anything to do with it. Now Carla McCall, past chair, she's saying, nope, it was on her watch, so it was absolutely hers. Now you're taking credit for the spring semester. Absolutely true. And you know what? All of us should take credit for that. We should embrace that, and we should continue to promote the fact that we are seeing these increases, and we want to continue to see that happen. But I will say, when Lexi goes out there and tells everybody accounting is a fantastic opportunity for your kids, encourage your kids to go into accounting, and then those same kids and parents start to interview other members of ours and say, oh my God, don't do it, the hours are awful, it's terrible, don't join the profession, that kind of works against us. We all need to be rowing in the same direction. And I used to say this to the partners of my firm with me doing recruiting in Buffalo, you know what, is this firm good enough for your kid? Because if it's not, fix it. You have the ability to do that.
Yeah. Well said.
Well, thank you very much. We're right on time here to move into a very, very active period in Washington, D.C. So Mark Peterson, great to have you here with us in person.
Thank you, Eric. Melanie and I are going to try and set the table for you with what's going on. I will tell you the table keeps moving, and one of the legs is short, and it keeps wobbling. But they are moving forward again with this tax legislation. Before that, just a little bit, Mark touched base on the tariffs. Not unexpected. There's been legal challenges because of some of the emergency powers that the president utilized in order to call for those tariffs. Again, not a surprise. The response of the administration to an international court ruling, we'll see how that plays out. A couple things that I think are positive is there does appear to be a thawing related to specifically with China. There are bilateral agreements that are happening on an ongoing basis. We're seeing lots of motorcades coming through DC to cut those deals. China's obviously the one that is getting the most attention, and the cabinet is all over in London right now trying to negotiate those things. The other point I want to make on tariffs, because it leads into the tax discussion, is so far the tariffs have brought in almost $70 billion. That's a 78% increase from over last year. Now, the discussion among the economists is whose money is that, right? Is that US consumers, or is that coming in from the external, as an external revenue? Two things. That discussion is going to come up as the tax bill is criticized because of the expense and the impact on the deficit. So although it's not directly connected, it will definitely be discussed in the same, for political cover. The other thing is that, again, the goal of the tariffs is to realign the US economy more towards manufacturing that has been deteriorating over years. Whether that happens or not, we don't know, we can't predict that, but what we do know is it isn't gonna happen immediately, even if it's successful. That puts a ton of political pressure on getting a tax bill done this summer, because they all have to go home and be able to discuss something that they got done. And the elections get closer and closer every day. Now, we've used this slide in the past to kind of set the table again as it relates to reconciliation. The big thing to remember about reconciliation is the fact that it allows procedurally for a simple majority in the Senate, 51 votes. So where we are right now is, as you know, the House put out their product. They got it voted out of the House floor by extremely narrow margin, but they got it out. So the Senate now is working through their process. And basically the way it works is each committee has instructions. They go through those instructions and then they put out a draft product. So far there have been 3 committees that have done that, one being the Banking Committee. And in the instructions about what the Banking Committee put out, this is something we've discussed in the past, is this idea of a provision that would roll up the PCAOB into the SEC. There is a budget savings in that. It did make it into the Banking Committee draft. Now, one thing that may be different in the Senate process than what we saw in the House process is the committees may not actually vote. So they will move forward draft language that will be combined by the Budget Committee into a package that will go to the Senate floor, but they can procedurally skip an actual vote at the committee level, which is one way to expedite the process. The big one that we're waiting for, which we could see on Friday, they always do this to screw up our weekends, is coming out of the Senate Finance Committee. And that has 2 parts. Obviously, it's going to have all of the tax provisions in it, but in the way that the Senate committees are designed, it also will have potential impact on Medicaid. So how that all comes together, whether we do see it Friday or Monday, yet to be determined. I will say that the goal, stated goal, is to have it done out of the Senate by the 4th of July, okay? If, in fact, they're going to make that deadline, and they love a holiday for a deadline, they really do have to expose it next week. There are time requirements for how long legislation has to sit on the Senate floor, and so the timing of that has to work. They are right now meeting at senator level, trying to make sure to figure out where they can cut these deals. The way to think about this too is, we talk about trillions of dollars, but I continue to say this, the goal for them is to figure out how to get 218 votes in the House and 51 in the Senate, and turning those dials, and how they do that is going to be really critical, and that will have an impact on the policy, the pieces that get moved in and out. The macro pressure on the whole discussion is there are senators that are saying it contributes too much to debt and deficit. One response to that is, well, look at the money that we're getting through revenue from tariffs. Another one is the House this week is working on a rescission package, rescissions being cuts. A lot of them were created through the DOGE process, and they will actually be validated by the House if they could get it off the House floor. That raises about $90 billion. So by putting together these cuts, it can potentially give a place for those that are worried about contributing to the debt and deficit somewhere to point, as it relates to trying to manage the cost of the tax cuts with some spending cuts. The other one is SALT at the individual level. A lot of noise around there. The senators are talking about reducing the cap from $40,000 to $30,000 or less. The House members that care about that dearly are saying, well, if you do that, Senate, then we're going to vote it against it when it comes back to the House. So that's kind of the negotiation that's going on. And then we've got a big issue related to pass-through SALT that Melanie's going to talk about as well. So this is going to be playing out over the next 2 weeks. We hope that we see draft legislation Friday, get a sense over the weekend at where some of these things land. Some discussion about do they do less? Do they actually just focus on the expiring provisions? One of the impetus to get this done is because there are so many expiring provisions. I think from a business perspective, that makes sense, right? So just deal with the expiring provisions and we'll move forward. But the political imperative is the campaign promises. And when you look at this slide of this is US American voters, what polls the highest are tax on tips, it's the child tax credit, it's the overtime, it's all of the things that were discussed on the campaign trail. And on the lower 5, you see extending the 2017 extensions. So yes, you could get it done. Yes, you could figure out a way for this all to cost less, but you're not going to get the political bump that you do if you don't do the whole package. There is also some discussion, which is going to be interesting to play out, of, well, we'll go back to the idea of a second bill, which Mark and I have talked about since the beginning of this conversation. The House wanted to do one big bill, which is what they did and voted on. The Senate wanted to do 2 separate bills because there is also policy in here related to defense spending and the border, which are other priorities for the administration. How does that play out? I tend to think that in order to get this done, because of the narrow margins, they got one shot with one bill. And the president's going to have to work really hard to hold those votes together. So that's kind of the backdrop for some of the discussion that we're seeing right now. Well, let's talk about that SALT issue.
Yes, the pass-through entity SALT deduction limitation that is found in the House bill right now is not law, to be very clear. And there's a lot of confusion around it as to how it works within the bill. So currently, we all know the individual income SALT deduction is $10,000, and when TCJA first passed, the pass-through entities were not meant to be bound by that $10,000. There was a tweet by Congressman Brady who came out and said that. And then, of course, the states came forward with legislation. 36 states and 1 city came forward, and they were able to take the SALT deduction at the pass-through entity level. So the proposed legislation, it ties in with the definition of the QBI, the Section 199 Cap A deduction, where that legislation piece introduces the SSTBs, which of course, us as accountants are SSTBs. And it essentially says, if you're an SSTB, you don't get a SALT deduction, and that is quite painful. So we're doing a call to action.
We are calling everybody.
Everyone.
We're calling everybody to action. We want to be one of the problems that the Senate has to fix. We did not like the House product. We made our voices heard. There's been a lot of activity. You've heard from us. We are trying to work in coalitions with others that are impacted by this, the SSTBs, which is the doctors, is in the consultant practice, pharmacists, veterinarians, to the extent you have clients that are in those businesses, to be sure that Congress hears. I am hearing feedback that the senators are hearing. This has been elevated to one of the top issues.
Hey, Mark, on that issue too, I mean, I think every one of us, especially if you have like a dental practice or a doctor's practice in your purview, you should be taking a picture of this QR code. You should be sending in your letter, sending it to your clients to do the same thing, and let them know that, you know, the organization that you are involved with, the membership organization, has really helped to push this forward, because your doctors, your dentists, they are not going to be happy if it pushes through the way that it is right now.
And the lawyers.
Yeah.
The lawyers as well. And we've been working so closely with the state societies who have been in the states with real leadership around grassroots, and that combined voice both in Washington and the states. You know, again, I can't predict whether we'll prevail or not, but no senator is not going to hear about this.
Right. So, as Mark said, we've done a lot of work and activity.
This is just an outline, and again, a thank you to those of you that have engaged in the fact that we're not only doing it, we're seeing it bounce back, both on social and in the media, and what we're hearing on Capitol Hill.
All the work is getting a lot of hits. So why do we care? So there's a lot of confusion around it. And I think this has a QR code and it has a chart and a little bit more detail in there. Because of that confusion, a lot of people think, you know, the One Big Beautiful Bill Act is a win overall for the profession. It's not. Yes, they increased the QBI deduction by 3 percentage points, but let's not kid ourselves, it's 3% with that. But then we took a major loss with the SALT deduction for the pass-through entities. So some people think, well, this really is for the high-income people. And for anybody who has, for example, a vet client out there, you know, the average income for a vet is like $125,000, and it says it can go up to, according to Google, $225,000. So they're not exactly rich by any definition, but they would be impacted and they wouldn't be able to take this deduction because they are considered an SSTB. Other people have said, well, it's really complicated, so maybe it wouldn't be bad if they eliminated this whole PTET SALT deduction calculations for it. But here's the thing. They didn't make it easy. They didn't say you don't have to do the calculations. And it's so complicated that even corporations with the non-effectively connected income may have to sit there and parse out the types of income that they have. And if it's an SSTB type of income, they're going to have to pull it out. So even they have work to do with it. And then the other question always comes up, well, what if you live in a state that doesn't have a SALT income tax? Why would I be impacted? Why do I care? Well, we live in a global environment, and most of us have clients that are out of the state. And if you have a firm that has representation in other states, depending on what your partnership agreement is, it could impact you and you could start losing some deductions that you currently have. So this is really painful at so many different levels, and it really goes against so many of the things that we stand and believe in.
And even beyond state income tax, there are other taxes that are included, right? Franchise?
Yes, the franchise tax. So in New York City, the UBT tax, unincorporated business tax, those that you've always been able to deduct, even after TCJ, even with all the workarounds, you wouldn't be able to take the deduction now. And there are studies out there that say for New York, your income could go up about 50% that you're taking tax. And then another aspect of it too, this impacts the GDP by approximately 0.02%, which I know that doesn't sound like a lot, but when you look at the GDP, you're talking approximately $60 billion of an impact. So it hurts our economy, it hurts everyone. Okay, so a lot of people think that it's the lawyers and the doctors that are hit up with this. This is a list, it's not meant for you to read it. My point is there's a lot more than lawyers and doctors. There's a lot of people impacted. So if it's not you, it's most likely your clients. Okay, so there's a lot of great resources that we have. So the title is a link which has a landing page to many of the things, but here is some additional resources. One of them just gives you the history, it lays it out as to what is happening in SALT. On the other side of the screen, you also see the impacts to the states, and this goes into the details about those franchise taxes that could be taken away. And like I said, this violates so many of our principles for the guiding principles of good tax policy. I mean, we're talking tax administration, simplicity, certainty, transparency, neutrality. This just really is not good tax policy.
So some movement for the Commissioner of the IRS. He had gotten through the committee process, Senate Finance Committee. The leader of the Senate, Thune, has just filed cloture, which basically starts the clock ticking for a process at which we'll probably see a vote on the Senate floor this week, if not this week, next. The Senate's in for the next couple weeks. I anticipate he will pass and he will be confirmed, so we will finally have a commissioner at the IRS. And we're going to be having conversations about IRS service, modernization. Those are the types of things that we have had conversations on, long history of that. And then a special focus because of sensitivity around the significant changes that are going on in a lot of the federal agencies. Now this is just a handful of the issues. My checkerboard is really big of things we have to follow, but I just wanted to hit a couple. You know, we get questions about SAFE Act, which is a legislation very popular. It's not in reconciliation, but basically it's an automatic safe harbor for extensions at 125% of previous year. We feel really good about the bipartisan support this has. And there is a bipartisan package that we could see outside of reconciliation that would happen. We've done a lot of work around that. Another one that is interesting that we've talked about for quite some time is called mobile workforce. And basically it's a 30-day de minimis standard nationally for state income tax withholding. We've got this, again, this patchwork, this quilt of state income tax requirements. This is a simplification. We've seen a lot of bipartisan support for this over the years, but we've never been able to get it over the finish line. There is an attempt to potentially try and see if they could work this into the reconciliation package. Reconciliation rules are challenging because it has to have a budget impact. We'll see how that plays out. Fiscal state, Mark?
We've talked about this a lot, and I know in our initial town hall briefing when the reconciliation bill first came out and we were talking about it being pro-business, which it is, generally speaking, there were many members who said, but at what cost, right? And so the increase of the deficit and the impact to it, this is something that we've been focused on for quite some time. What was it? Government at stake. We used to have that program.
What's at stake? Yes.
Yeah, what's at stake, and I think that's something that we need to establish as we go forward as the profession of trust. That we need to have really bigger conversations around the fiscal state of our nation and how sustainable is it. We had a lot of talk about that yesterday when we had the panelists on the economic outlook. That this is not sustainable. What was it, 33 is when the Social Security basically dries up. And so now when we start deficit spending on Social Security, we have really, really big problems. And so we need to head that off at the pass.
So again, an issue we've been vocal on and we'll continue to have a platform as it relates to that. Contingency fees are in the tax bill. It's in conflict with our ethics, right, Melanie?
It is in conflict with our ethics, and we say that we shouldn't be able to have free rein on contingency fees because it breeds things like what happened with the ERC. Okay, so round robin here, just to keep you up to date what's going on. The IRS has requested for more information with the mandatory e-payments, where the only way you could get out, it was if there was an emergency associated with it. And we are actually going to be submitting comments in there because we do have some concerns for those of us that have clients that are elderly and can't access online accounts, or those that are foreign and abroad and don't have accounts that would work with the United States systems. We also submitted 183 recommendations to Treasury for our annual priority guidance plan. And what it is, it helped Treasury ask for feedback as to what they should be prioritizing so that they can issue regulations, notices, and guidance to people. And so that ranges the gamut anywhere from disaster relief through corporate AMT guidance and net operating losses. So things that we really care about the profession, and it runs across all the divisions at the IRS. There was also the OMB, Office of Management Budget, came forward and they gave more details to that 20% cut that the administration proposed to the budget to the IRS of the $9.8 billion. What was interesting is they gave a 30% budget to enforcement, they gave a 30% budget cut to enforcement, a 37% budget cut to operations, but they increased taxpayer services by 30% to 33%. So it's just an interesting read, and clearly they are caring about taxpayer services, and that's something we're keeping an eye on.
And services is a huge issue for us, and we're going to be very vocal related to that. But we've got, the things that the discussions that are going on at the agencies right now. This is a sleeper, but they're starting to work on 2026 budgets. So they've got to get the appropriations process done. Otherwise we're looking at another government shutdown at the end of September. A lot of pressure on further cuts through that process. And then I just mentioned the rescissions package that's sitting in the House floor right now. So, there's a lot of, budgetary pressure on all of the agencies.
There is. And also the data book is an annual book that the IRS releases with their stats of how they're faring and how they're doing. And it's interesting. So it's been around for 30 years. And inside of it, it touches base on, for example, like they filed or they went through 266 million returns. They gave out $553 billion in refunds. And of course, they gather about 96% of the government funding is where they collect it through the IRS. But a little nugget of information that you can compare is, so they can collect, for every $100 they collect, they spend 36 cents. And back in 1995, for every $100 they collected, it was 54 cents. So they have improved in efficiency. But next year's data book is where we're really going to see the effects of all the workforce reductions and what's happening with the IRS.
Well, that was quite an update. I tell you, a lot of great feedback coming in, Mark and Melanie, so thank you. And people also like the slides, Mark. They like your bingo card. So,
Pick an issue, Eric.
pick an issue. There you go. Well, here, the future of tax research, we talked about AI earlier in today's update. Here's it's a 12-page report. It's in your resources. It talks about how AI is really going to transform, and it is transforming the tax research area. There's a lot, what Melanie and Mark just went through, a lot of complexity out there. This is the way to manage some of that, to manage, current complexity of the tax code, to address tax planning issues, and to also quickly assimilate what these changes mean for your clients.
Yep, absolutely. And it's, like I said, we're seeing the advancement far more in the tax research space and the tax preparation space. Hopefully that catches up, but the tax research is here and now, and it is such a great opportunity. And I've heard nothing but, really great results from a lot of the small firm community actually really appreciating getting AI integrated into the tax research aspect.
Yeah, it's a great way to start. So now we got plenty of questions here. We're going to move into open forum. So Lexi, just great being with you. I'll kick it off. There was some questions related to the talent discussion. One concern is, what's going to happen to the master's programs potentially in accounting with some of these changes with the alternate pathways?
I think the master's programs are still a viable option. I mean, that pathway still exists to get to a path for CPA. And I think that one of the things that I've always found with the master's, it's like, what are you seeking out? I found people that I know that have obtained a master's, it's a lot about leadership and developing those skill sets that are critical for really rising within any organization. So I do think it's very viable. It's just making sure the content is relevant to today's world.
Yeah, to that point, Lexi, I don't know if we had the numbers. Not everybody got a master's to sit for the 150 hours to be able to sit for the exam. So 150 hours still sat out there as an option. Now with the additional pathway, bachelor's plus 2, we bring back the third option around that. And people are like, oh, it's the death of the 150, thank God. And we're like, no, we don't want to kill it, because we want those that decide as they've graduated with a degree that they can't get a job in, with just another 30 hours, they can you sit for the accounting exam.
Right, and if you have that 150 that includes getting a master's, then it's 1 year of experience, not 2.
That's right. That's right.
So thank you. Question regarding the reconciliation bill. So, the effective date. I mean, is there any chance this could be retroactive?
I mean, so one of the reasons why they have temporary provisions is because of the budget window, and it's about the money. And that's why they're going back to try and make them permanent. So I think there is the possibility that there could be retroactive provisions. How far they go back will impact the cost, which again goes back to turning the dials. And this is, again, when the proverbial sausage being made, it's not necessarily the best tax policy, but it's what can fit through that political window. But you should comment on
the
some
SALT deduction
Yeah.
piece is effective, what's being proposed for this current year, meaning we would be filing whatever passes this April. So, yeah, that's borderline.
always an issue.
Yeah.
Well, something we'll continue to track here on the town hall. Mark, so we talked about we talked about AI, and tax, and a question coming in related to the IRS. Mm-hmm. And I know this is something you've had discussions with the IRS and others related to the modernization. And how do you think the opportunity the IRS has? And they've talked a lot about their AI investment.
They have, and you and I think we've talked about this before on a town hall or in an update. I've had this question before. One of the things I'm encouraged by is, the Treasury Department's great interest, I believe, in getting involved with the modernization of the IRS. Having that level of support from Treasury, I think, will be important. Michael Falconer, who you've had on the town hall over the last couple of years, our PPP connection back in the day of when PPP was happening and the origination of the town halls back in the day. Falconer was a big part of that. He's been on record to say, the IRS is 5 years away from modernization, and they've been saying that for 35 years. So at this point, he'd like to get it done in 2. I do think they are having the right conversations. Gary Cohn, who we had yesterday as part of the Economic Outlook panel, he's on the board of IBM. He said IBM is actively in conversations with the IRS. We even talked to him on the side to talk about the fact that the profession, we'd very much like to be involved in the modernization conversation. And I think that's going to be really important. So it's hope more than anything. And I think that this administration is focused on it. We'll continue to have those conversations. It's necessary. It is. And the whole idea of the layoffs and everything that's happened with it, are there other ways that we can have a better functioning IRS without having the personnel when we can get the technology to where it needs to be?
Thanks, Mark. We did do the poll. I'm going to share, we'll be putting these results out in the newsletter. This poll was asking the state of readiness for the December 15, 2025 effective date. Over half of the town hall, we have over 10,000 on with us today. Over half the town hall said this was something that they were related or aware of in their firm, so they answered the question. 40% said somewhat likely or very likely. 47%, about half, said they were unsure if they'd be ready, and 13% said they're not likely that they'll be ready. There was, so I don't know if any, and so we have work to do.
We do.
And we'll continue to get resources out related to that, and appreciate today's question coming in. If you just do comps and reviews, does the QM standard apply?
And I believe it does.
Yeah, it does.
Yeah.
I think any financial statements.
Yep.
Yes. So, Mark.
However, that said, so the standard, even though it applies, now it still doesn't mean it's a scalability thing. If I'm only doing reviews and comps, it may make it a little bit easier on implementation, be it that those are the only 2 focal points.
I would think so, because the standards that apply to review and comps are very different than audits.
That's right. That's right.
So, Mark, any just in kind of Peterson lightning round here? So, is this the bill here? There were some predictions yesterday on stage. People saying, maybe August timeframe.
Well,
we're hearing from the White House it's July 4th.
The 4th to get it out of the Senate. The backstop is, well, there's 2 backstops. One is raising the debt limit, which is included in this bill, and if they don't do the bill before they run into the debt limit, which is supposed to expire in August, but because of the way that the Treasury figures that out, it could get delayed into September. So that is definitely a backstop, because running that vote outside of reconciliation will be a huge political challenge. The other one is just what I mentioned before. Once you get past the 4th of July, then the next backstop is the August recess. If you send members of Congress home with a big deal pending, it can unravel. And then if you move past that, then you're getting into the fall. And it's hard to hold a deal together. So there's a lot of pressure to get something done in this next work period. But we'll see. They got to get the deal.
Well, Mark, thanks for the updates. Thanks, Melanie, as well. Lexi, thanks for your leadership and role as chair and being on today's town hall. So Mark and I now are going to clear a couple of the final slides here. We've got an audit benchmark survey that we're putting out. This is an agnostic survey. We're just trying to understand what's happening with the firms. We've done benchmarking surveys in the CAS area. So this is something that if you participate in, you'll get more information. And this is something we'll be releasing to the entire profession. Mark, this is something you're very, very close to.
MAP survey, I've known it a long time, and started with the AICPA in 2006 as a senior manager of PCPS. I've seen many a MAP survey along the way. This is just such a great way as a small firm. Many small firms say, how do I know how I'm doing? this is the way to find out. It is really geared towards the smaller firm. It is a great way to see how your practice lines up. What should I be spending on technology? Where are personnel costs in relation to overall spend and revenue as a percentage of that? It is a fantastic tool. You get personalized results, and there's a tool in there to continue to talk about scenario planning on if you made a couple of shifts, what would that do to your practice as you go forward? So absolutely fantastic tool.
Well, great, Mark. And we'll be releasing whatever surveys and benchmarking reports that we have at the upcoming Digital CPA Conference. So that's the next time. One of the next times we'll be doing a live town hall. So here's some information related to Digital CPA 2025. You've got your resources here for the town hall. Take advantage of those. We will be doing the rebroadcast of this event on Monday, June 16th at 1 p.m. And here's the upcoming town hall. So it's fantastic being with the live audience here. Mark Koziol, thank you for your leadership in the panel. And thanks to all of you online. We welcome being with you and look forward to being with you again on June 26th. That's all for now. Thank you.
Thank you.
Thank you for your participation. You can also subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and find resources at cpa.com/townhall. Tune in for live broadcasts, Thursdays at 3 p.m. Eastern Time.